Hi and welcome to my channel. Today I want to talk about the consistency rules in prop trading. There are a couple of videos out there, but in my opinion they are missing some information I think is necessary to really understand the consistency rules. They are really simple, but just start with what's it all about. All the prop trading companies out there have some form of consistency. They wanna try to prohibit gambling, flipping. They wanna sort out traders who are here for casino-like games and who over leverage, oversize, and so on. I only copy pasted from two companies. One is the Apex consistency of 30%, and the second one here is from my funded futures. Always it's very important to know all the rules of the prop firm you are using. Especially I like the wording or the formatting here very much is that you cannot withdraw. It doesn't matter much in the evaluations, but if you're a funded trader in the funded account, it is a big hassle when your payout is denied or if you get problems here. Before I'm going to talk about the problems I see with the consistency rule or the limits, let's look at the calculation itself. It's really simple and easy. You only have two ways to look at it. The first thing is, if you know your profit goal, your profit target, you only have to multiply your profit goal by the percentage to know what your maximum profit per day should be. As an example, the 30% with a profit target of $3,000, you multiply 3,000 by 0.3, so $900 is the profit goal you should limit yourself. And the second calculation you need to know is if you go over your daily profit, you need to know what profit target you need to reach now. So if you know your highest winning day, divide your maximum profit day by the percentage and you get your new profit goal that's needed for withdrawal, for example. So in the same example with the same percentage, we had a profit day of $1,500, and if I divide the $1,500 by the 30%, 0.3, my new profit goal before I'm able or allowed to withdraw is $5,000. Now in my conclusion, now we come to the first problem about the rules. The rules constrict us in our trading, and I wanna share my opinion here and my tip, what you need to be aware of, because personally time is money, and if we take the same rules, the same example as before, you have two different scenarios that can happen. The first one is, if you look here at the results and the change in the balance, you can see small winning day, profit goal stays the same, and then the first scenario, we have a big losing day, and now on the next day we can't recoup the losses from the previous day, because exactly to the rules and calculated like on the sheet before, our maximum profit shouldn't be higher than the $900. So I wasn't able to come back to, let's say, zero. And the second scenario is, if I have a big losing day and on the next day I am able to win it all back, now I have a new biggest winning day, and according to the rules, I need to calculate my new profit target. And as you can see, in scenario A, I would be behind $100. In scenario B, I'm behind $333 now. So a lot of companies do have additional rules in place, like a daily loss limit. But in my opinion, that shouldn't matter for a trader, for yourself. You should have rules for yourself. And as you can see in this example, your rules should be that your biggest losing day must be less than the maximum winning day according to the consistency rules. Because in conclusion, there are two things: you lose time and you can't chase your profit goal because it will go farther away every time. The second problem is much bigger than the first problem, because I have a 5-minute chart of the Nasdaq from last week. There was a big sell-off happening, and in this example, you had a news event here before the opening bell. You had the opening bell here, and if you look at the chart, you would be able, according to your strategy, according to your risk and so on, you would be able easily to short at around 800, go down to the opening bell, maybe scale out one contract and scale in again after breaking the next level, and then it was going down to the 400 level. And even if you trade micros, and even if you don't size up, this one is a 100 point move, so 400 ticks. And here, as you can see, there is the first candle with no lower low, but the next all had strong selling going on. So this was at 550, let's say 560. That's another 150 point move minimum. And to be honest, I wasn't able to capitalize on the whole move. But in retrospect, if you look at this and you were able to short at 800, you can be a little bit less strict with your runner, with your stop loss. So you should be able to take the whole move down. And now here is the main problem with the consistency rule. Because if you normally say easy strategy, we have 1, 2, 3 contracts, 2 contracts for a small profit target, the third contract as a runner. If I have a 500 point day, like it's, or 400 point day, if I have it here, then my profit target would increase to over 1000 points. So what does that mean? If you normally have days of 20 points, of you say, let's say 40 points, 2 positive trades, then you need 80 such days in a row to be able to withdraw. So I'm really not happy with any consistency rule in regards of a trading style where you don't go for a small hit. Instead you go for a runner also, or you go for the real trend days. So I am aware that you opened my YouTube video because you searched regarding the consistency rules for an explanation and so on. But I want to stress, don't adapt to the prop firms. What's the meaning behind that? You need to follow the rules, of course, but you also need to be aware, what kind of trader are you? Are you changing your whole trading style just to be able to trade with prop firms? I don't think so. I don't think it's a really good idea. maybe it's a good idea to have some external rules, because sometimes it's better to know, okay, I need to stop trading today. If I would trade my own account, maybe I wouldn't stop and have higher losses than with a daily stop loss rule. But the main meaning, don't adapt to the propfirms. Look around, there are a couple of companies out there. Apex, as one of the biggest one, has the 30% pools. But just on the next point or next place, we have my funded future, and they offer two different plans. They have one starter plan with a 40% consistency rule, and in the expert plan you don't need to follow any consistency rule. The same with Blue Sky, has after the evaluation period no consistency. Topstep has no consistency. They have other kind of rules. Or you can also look at the different percentages, so you know, okay, I have normally my small days are $100 or $200, and my bigger days are $500 or $1,000. So you need to calculate for yourself. But in a conclusion for this video, think about it. You can't chase the profit goals. You lose time if you don't have your own daily loss limit, and according to your trading style, look for the right company for yourself. If you have any comments or any questions about the consistency rule or about my thinking about it, leave them in the comments down below, and I'll be more than happy to answer them for you. Good luck again, and I'll see you guys soon.